The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. Right now we have, whoa, there she is. Fast fingers out here today. Okay, right now we have the Dow down 114, Nasdaq's off 38, S&Ps are off 16.5. And when we take a look at this market out here, you can expect high volatility on a continual basis all day long out here, folks. What we have is that you have the markets down across the, one second. There we go. You have the markets down across the world, big numbers. Now, our market's not. And when you take a look at this, we put the future up for a second. What you're going to see that what we did out here is this. The S&Ps, they're trying to fill the gap. Bottom line is that they've already failed at this 079 number. And I suspect what you're going to see now is that they're going to put some pressure on this baby to get into the 768 number. You know, right now we're at 78. So you're down 17. And this is a classic, folks. And the classic being that you wake up in the morning. The futures last night at 6:15 were down 34. They move it topside. And if you think that the rest of the world is not going to affect the U.S. markets, bottom line is that it's going to be a huge wake-up call. One of the best quotes I heard out here last night was out of Greece, no doubt, and what that was that the banks are closed, and their prime minister come out and said, "Oh, listen, there's nothing to worry about. Your money is guaranteed," and bottom line, folks, is that what you have in Greece, flat out, is that the banks had $2 billion last night, and out of $2 billion, there's $120 billion they're supposed to basically give out. So you can do the math on that deal, and I suspect somehow, some way, they're going to have to figure this out in the next week, 2 weeks, whatever that's going to be. But bottom line is that there's problems in paradise out here. And it's just not, what Larry was talking about. It's so cool. I got to get Larry on and interview him this afternoon, because Larry sent out a bunch of charts. And, he has an amazing newsletter, folks, okay? And when he was talking about the margin debt, I'm sure he may have, I was on my way, and he may have showed the charts that he has. The margin debt is phenomenal. When you look at just in the U.S., when I was looking at the chart that he sent out, the margin debt in the U.S. compared to 2000 or 2007, it's over the top. I mean, it's just absolutely over the top. So in that context, what ends up happening is that this hit here is not bad. Bottom line is that it's almost like the market's going to fry them like a slow frog. That's kind of how I'm looking at this market right now. The reason being is that each and every time that we have gone down, market rose all the way back, people have been right in the assumption of staying in the market. We'll see whether it's different this time. What we did have on Friday is this. We had a rebalancing of the Russell 2000, which puts monster volume into the marketplace. That monster volume, folks, is a low intraday on all the indices with volume. What that sets up is lower price. We go over and we take a look at the transports. The transports are the first indice that is coming into that October 2014 swing point. Right now, we're 11 points away from it. We've hit 81.80, and what I expect you're going to have here, and this is where the real danger comes in, we're going to have volume in this marketplace today. So the transports this morning hit 81.80. The benchmark there, the projection is 81.69. Right now you're at 82.07. But what I do expect you're going to see as this day goes on, you're going to see more selling in the marketplace, and we'll see what type of acceleration on the way down that we do get. If we go take a look at the oil market out here, what you have And the oil market is trading down about $1. And what we have, the oil market's going after the lower swing point of the consolidation that it's in. That lower swing point is 56.88. We've traded as low as 58.04. There's nothing to basically stop this thing from getting down into that level. Some of the Dow stocks out. Well, actually, let's go to the XLE, because the XLE has been screaming that oil wants to go lower. The XLE right now is trading at a price point of 75.42, and bottom line is that it wants to get out of the 73.82. The 73.82 is the swing point from March 13th. I expect what we're going to see, we're going to drift our way down to the 71.70, which was the January 14th swing. Exxon, Mobil, Chevron, all of the above, they look that they want dramatically lower price. Now, let's go over to the TLT, because what had happened last week, it's pretty amazing, man. This TLT and the bonds themselves, it was like, these things, man, want to turn once again. Well, bottom line is that, they did. We'll see whether we get the juice inside this. Now, the TLT would have to get back inside 118.13 in order to really get into higher price. If we look at the 10-year, however, what's happening with the 10-year and the 30-year, that's saying that you are going to go to higher price. Once again, lower yield. And what that's going to be the amount of money that is getting out of the equity markets. Not necessarily, it doesn't have to get out of the equity markets. Bottom line is that people just want their money back. That's how this whole thing is shaken out. And those bonds, they look to me that, once again, doesn't mean you're going to go to their highs, but what you do have, you're going to get a heck of a counter-trend bounce. The 30-year out here today has already done 199,000 contracts. That 199 is coming into 332. What the 30-year has done is that it's got back inside the 149.17. Once you're back inside that 149.17, that sets up that you can run up to the 155.27. And bottom line is that you get up into that level, it can go right after highs once again. Some of the inside here, we'll take a look at as to what is moving the markets out here. The Dow, inside the Dow, this is what you have. There's only one stock that's positive in the Dow. That's Pfizer. It's up 5 cents. On the way down, you get JP Morgan Chase is down 126. Visa is off 112. You get Goldman down 293. And you have Cisco down 35. Inside the NDX 100, what do we have? Inside the NDX 100, bringing it higher. And in fact, what is intriguing about the NDX 100 is this, is that you get 100 stocks, and bottom line, you only have 2 that are in the positive, and they are both Discovery. You get Discovery A shares are up 53, Discovery K shares are up 42. The largest laggard inside the NDX 100 is Staples. That's down 34 cents. You get Western Digital. That continues on the way down. That's down 136. You get Liberty down 92, and you get Sirius Satellite off 60 cents. The gold, bottom line, we want to see more price spread, accelerated volume in the gold. The euro is a trip, no doubt. If we take a look at the euro, you want to see something that absolutely just filled this gap. And Larry was talking about it, how the bounce had come in. This is a classic. You know what's a classic about this is that you got to figure, okay, so the top of the gap on the euro is 1.1159. We hit 1.1160. It's just crazy how it whacked that baby. Then, we're hanging right up there. This is, you wouldn't, to me, in this one here, you wouldn't even have to be a technical person to understand that, guess what? The German banks are on the hook for monster money. The propaganda is that don't worry about a thing. Your money's okay. When you look at that context, it's like, oh, really? Okay. This is, you're going to see the classic of how you hold the market up so these monsters can get out, and then they'll figure out where the propaganda is going to come out of as to how they're going to basically straighten this deal out. If we go over to the DAX, you take a look at the DAX, and you want to see how the DAX is trading. What you're going to see is this. DAX comes down to the swing point today, doesn't make it. It would have been better if you were a bull that the DAX actually made it to the swing. That's 797. It made it to 964, because what that sets up, that's building cause. We're gonna you have big volume in the DAX out here, okay? So with that setting up, building cause in order to break that level. We go to the FTSE, we take a look at the FTSE, what you have with the FTSE, same type setup with the FTSE. The FTSE actually broke it, and the FTSE has been breaking into lower price with volume. And I expect when we get the volume a little bit later today, you'll see it. The FTSE is at 66.81. That little baby wants to run down to this 62 area. Shanghai, man, that's that market, no doubt, not only was in a bubble, and this is only the beginning on Shanghai too, by the way, folks. Okay, Shanghai's down 10% in 2 days, or 20% in 7 trading days. This is heavy duty deal. Shanghai last night, you talk about volume, did 67 billion shares. Got down to a price point of 38.75. If we take a look at this and we bring Shanghai back, what you'll see, Shanghai, okay, so we're at 4,053. The first target is 32.39. More than likely, you're going to go to 2,600. So what you're going to see there is Shanghai is probably going to be down 50% in probably 3 weeks. Yeah, that's a market. 877-927-6648. The Dow's off 139. Nasdaq's off 43. S&Ps are off 19. Guess what? That bounce was a gift from the trading gods, folks. What a beautiful thing that is. We'll be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction funds. To obtain a prospectus or summary prospectus, please contact the Direction funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Okay, so in Greece, folks, you wake up in the morning, your banks are closed. Hopefully people took as much money out as that they could, but the bottom line is that they didn't, which absolutely doesn't make zero sense on a common sense basis. Okay, so picture if you are in Greece. Okay, what are the controls? Okay, so you have a lot of different things happening simultaneously. The capital controls, however, would be the biggest deal. And this is how it's working in Greece right now. So at an ATM, bottom line, the ATMs are open. You can take out 60 euros per day per card. That's it, 60, okay? Purchases in stores and online can be made from Greek retailers with bank accounts in Greece using credit debit cards. There is no limit on the transactions other than the daily limit of the card. So what you'll end up getting there is that they'll get into a barter system very quickly. Internet money can be transferred to internet phone banking provider that's within the country. There's no limit on these transactions. Transferring money abroad is banned. Okay, bottom line, they don't want anything going out of the country. The committee, paying bills, taxes, loans, these payments can be executed through phone banking. Now, this is the big one. So Cyprus went through the same deal, and Cyprus ended up having 2 years of these controls. This is what the difference is between Greek controls and Cyprus controls at this particular point. The measures announced by Greece are much stricter than those put in place in Cyprus in March 2013. Withdrawals from ATMs in Cyprus had been limited to 300 euros a day, not 60. Payments abroad were up to 5,000 euros, were not subject to restrictive measures. Bottom line is that the Greeks can't send anything abroad. Cyprus traveling abroad could use their credit and debit cards for hotels and other expenses at a price point of 5,000 euros a day. They could also carry 1,000 euros in cash with them per person per journey. Bottom line, check this out, folks. The Greeks can't do that at all. They're broke. That's the bottom line. So the Greeks, they're trapped like rats. And as to how long it's going to last, there's not a limit. Cyprus kept the controls on for 2 years between 2013 and 2015, even though, and this is a heads up in the aspect of what you're going to be carrying out of there. This morning, the bottom line is that they said, okay, now the banks are going to open on Thursday. The banks aren't going to open on Thursday, folks. They're going to throw anything and everything out there. When I heard the aspect that the Prime Minister said, don't worry about your money, then I knew that, okay, everything was on the table, meaning let's just throw the propaganda out there. Bottom line is that the controls in Cyprus were only supposed to be temporary. That lasted for 2 years. So you can see how this thing shakes out. And it is buying time. The thing, that cracks me up, as they call it, a bank holiday. The bottom line is that you can see that the twisted use of words in aspects of how they want to push the envelope in a huge way and basically just lie. So we'll see where the whole thing's going to shake out. We'll see how, when, and if, in fact, banks will open. The German banks, bottom line, they get hit. They get hit in a big way because the real one of the larger keys out here is that where is all the debt lying? Now, in that aspect, what we do have is this, and this is where contagion, basically can get going in a pretty good way. It has to do with what were the bets involved by large funds as to the banking structure in Greece. Would it be fixed? Would it not be fixed? And who is holding the bag on this? There's going to be banks holding the bag. There's going to be hedge funds holding the bag. And we'll see where that whole thing does shake out. The closes out here today, I can tell you, even in Europe, are going to be a big number. The reason being is that, the DAX is, we're at 11,200. That's not the end of the world. That is only 10% off its highs. The FTSE, however, which is not down that bad today. It's only down 83. That little baby is also down about the same percentage number. What I expect we're going to see is that, we bounce back. The Dow is only down 100. I suspect before the day is over, folks, we're going to be down like 300, okay? Because the disconnect is so far out, meaning you don't see Asia down 3.5%, 6% last week, Europe down 3.5%, and we're down 0.8%. That's fantasy world. And fantasy world lasts for a while, but guess what? Fantasy world, in the context of money, they're selling into this so fast they can't see straight, and they're just blessing themselves along the way. This is Tom O'Brien. This is TFNN. Dow's off 159. Nasdaq's off 48. S&Ps are off 21. We're going to be right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow off $160, Nasdaq's off 52, S&Ps are off 22. Let's go to Jerry in Boston. Hey, Jerry, what's going on?
How you doing, Tommy? Thanks for taking my call. I appreciate it, man. I'm looking at McEwen Mining. Holding it long term. It's an IRA play for me.
Okay.
I'm hoping the company's going to stay in business here. Looking for your take on it.
I think you got action here, man. Okay, so check this out, folks. Okay, now all the miners, folks, have been in trouble for quite a while. There's no doubt about that. McEwen, okay. Bottom line, it tested the swing low here at 90 cents. And that swing low, watch we put this up. It was a monster swing low, too, with this insane amount of volume. 1 second, let me get this up on a monthly. But you got the test, and that's what you needed. So we had, on a monthly basis, 76 million down there. It ended up testing that with 11.7 million in March. Okay, so your first acceleration down, that was December of 2014, tested in March. Then, today's going to be a big day. And it's not that the grease thing is a big deal. If we put this on not to McEwen Mining anyway, if we put this on a daily, what you're going to see is that we had gone down again March 10th. On March 10th, that's on the daily, we got down to 90 cents. That was testing the low on the monthly. It did it with lighter volume. We did 4.1 million shares there, okay? Bottom line, you got down to 92 today. They rejected it. You traded at 96. What you'd love to see is this. If you can close over 964, and right now we're at 960, and it has reached 962, that's saying, hey, the game's going to be on up to this 115. So technically, it's a decent setup. Fundamentally, the bottom line is that they are starting to push some numbers out now. Last year, this is basically a company that's just getting into production. Last year, the year before, they did 46 million in revenue. They plan on doing 60 million this year. So. Bottom line is that you want it to go into that swing point, and you want it with volume. And what we have, Jerry and folks, is this. We've had no sellers, okay? Everything's gone down to the very bottom. And we need buyers. That's the bottom line in the gold equities as well as the silver equities. You're getting some of that today in McEwen. So you'd like to see a wider price spread, accelerated volume. You get that, and you get action, man.
Right on. Appreciate it, Tommy.
Okay, man.
I'm going to hang up, but if you have a chance, you can talk about BAC, Bank of America. Appreciate all your help, Tony.
Absolutely, man. Have a great one. Have a safe one. So let's look at Bank of America. Bank of America, folks, okay, BAC right now, that's trading out at 1704. Now, that failed at the highs, okay? So I suspect what we're going to have with Bank of America, if we take a look at this, it was running into, watch this, we'll put this out. Let's put this on a weekly first. What you're going to see with BAC, weekly, this is that it's been at these highs now since March of this year. What Bank of America did last week is that it was trying to get into the high once again, which is 1821. It ran up to that area, and we got up to that area on a weekly with 304 million shares versus 512 million. And the 512 million is how we came off the highs in January. Now what you're going to have is that it couldn't handle the highs, so now it's going to try to get into the 1675. And where the 1675 comes in is this. It's in a consolidation. When we came off the bottom in January, the high of the expansion top side is 1675. You get into that with volume, then that sets up, guess what? That's going to set up lower prices as we come into those lows. And I suspect, the banks themselves, if we take a look at the XLF, the XLF itself, bottom line, had failed. It was strong. There's no doubt about that. It made it all the way up to the very top. In fact, it broke the top the 18th of June. That was 25.31. Now what you're doing is that you're breaking the swing low, and you're going to do it with volume. So far, the XLF today has done 12.1 million shares, and it's going into a swing point with 21 million. So I suspect you're going to basically blow that baby apart, and what that, of course, has to do with is that no one really quite knows who's on the hook for what here. That's why these banks are going to sell off pretty quickly, and they have. That's the first part. The second part has to do with the interest rate structure. Interest rates, bottom line, the 10-year right now is at 2.3. Interest rates are going back down. Bonds are going back up. And what does that do to the spread in banks? Bottom line, that takes the spread in banks, and it doesn't destroy that model. But if the rates don't get higher, the banks themselves will make less on the spread. That's the first part. The second part, what is happening, not slowly, but faster than I think banks might understand at this point. The public doesn't understand it quite at this point. And what that is that there's a huge amount of internet banks and lenders that are basically taking some of the bread off of banks, and there's large internet ones, there's small ones, there's even the aspect that, check this out, there's the aspect of, what our real estate fund does inside the structure as to first mortgages. If you want to check out how this affects banks, well, check it out. When I put together this first mortgage program, right, it's a 4-year program. The investor gets 5%. They're getting collateral of 70% of the loan to value, which is huge, okay? But what it does is this. It's cutting the banks out, because on a CD aspect, no one can get 5% for 4 years. It's not even close. You're talking about 1.5. On the aspect of the person that wants the money, us, okay, we're saving money on one side, because on a short term, what ends up happening is this, is that I can get money basically at about 5.5%, but this is what ends up happening. I can't get it without a prepayment penalty. They want to give it to me for 5 years. I don't want it for 5 years, because then we have to pay 2% on top of that, which makes no sense to me. But you see what happens? What's happening is that on a small basis, we are cutting the bank out. The person that wants a CD, they get great collateral. They get 5% paid monthly. On our side, we end up saving about 3%. And what does that do? That just cuts the bank out. Because what ends up happening, and the banks are getting attuned to this right now, and that's only one aspect. We're a drain drop in that aspect. But what is happening is that there's larger platforms that are doing that are cutting the banks out. And I suspect I know we're going to see a lot more of that, because all you have to do is make the deal right, and it's a lot easier making the deal right in the aspect of independent versus what a bank is actually doing out there. And of course, you can move a lot quicker. And that won't end, by the way, if in fact the rates go up or down, because the structure there will just be whether we're doing it, whether someone else is doing it, you'll change the rating structure as those rates go up and down. So let's picture the rates go even down further. Well, guess what? Then we would offer less interest. The rates go up, we would offer more interest. The spread, however, that the banks have been making is getting cut into. That's the big basis out here. And guess what? It's dynamite for the economy. That's the real bottom line. Because what ends up happening is that as soon as you can cut the banking structure out and make a little more and save a little more, what does that mean? Bottom line, it means less for the banking structure. So I suspect that's one of the bigger issues that is going on out here and is going to continue to go on out here. If we go take a look at the volume characteristic out here right now, what you're going to see is that on the NYSE, it's actually short volume. There's not a lot of big volume just yet. NASDAQ, different animal altogether. NASDAQ, they're selling that NASDAQ down, and they're selling it with some juice. If we go take a look at the SPY, the SPY right now is getting ready to break out its lows. It's done 40 million shares. The SPY is going to is coming into its lowest swing point out here of 207.69, and we're coming in with volume. The characteristic is 105 million. Right now, we've already done 40 million. We take a look at the 3 Qs, what you have with the 3 Qs. That has done 11 million, and that's coming into a lowest swing point that has 31. So the Qs also are going to come into that area with some juice. If we pull this up for a second, where do you see this? This is pretty cool, actually. This is going to be pressing the lows. See, what happens because of the SPYs and the, where is she? Let me find this one. Because the SPYs in, here, we'll put this one over here. What we have is that the SPYs and the Qs, they, because it's market hours, they are going to go after their lows right now. We're at 108.15, 107.89 is the number. You know, the last get-go down, the volume was kind of light. Well, it was light, flat out. That was last 10 minutes was at 747. It's going to press into that number. And we'll see whether we get the press, and does that press come with juice behind it. The S&Ps, the SPY, the last time down, we got to this 207.80. That had the juice. You know, so we're going to see that once again press into that area, and I expect what you're going to see is that will close, that will go after the low number one, which is another 19 cents down, and more than likely are going to break that low. Now, if you break that low, you're going to have if you break that low with volume, you're going to have an ABC structure down. That would be a very big ABC structure on the way down. So the let's see, EUR, the euro out here. The euro right now is at 111.61, and that gap out there is the 111.65. It's pretty wild watching that whole euro shake out. We go over to the dollar index. What do we have with the dollar index? We take a look at the dollar index. The dollar index has got to a high today of 96.69. We've done 48,000 contracts, and this is going to be wild watching this shakeout, okay? So this came back. It's below the gap right now, but it's right into where it had gone topside on the 26th. So we'll see whether the dollar can basically crawl up into this 95.82 area once again. And what you can imagine, folks, there's no doubt, between our Fed, the European Central Bank, they are trying to calm these currencies down as much as they can calm them down. And, you know, I suspect you're going to see that all day. But what you are also going to get is that when you have volatility like this, and the volatility is in the currencies, bottom line, this is not going to, the volatility is not going to stop. That's how this thing shakes out. If we go over to the future market, we take a look at the future market. What you have inside the futures right now is that we're at 2077. The futures themselves, they almost filled the gap. They come back down, and the battle is going to be on the minis at this price point of 2076. That's where this price point shakes out. We look at the Dow Industrials. If we take a look at the diamonds, what you have with the diamonds right now at a price point of 177.81. You're coming into the swing low, and you're going to have volume on that also. We're at 1.8 million. You're going into 4.7 million as well as 5.1. The small caps, we take a look at the small caps. Small caps are down 92, and the small caps have come into the lower range. So we'll see whether the small caps actually stay in the lower range. That lower range is 126.31. We hit 126.17. We're at 126.56. And the reason I'm using that benchmark and not the higher high is that on all these indices, what we've done is this. The February 25th S&P was the first high. We've been in that consolidation since February 25th. The number we're using in the small caps is March 23rd. That was the first high that was established there. That's the high that's important in the aspect. Can it stay above it? With volume, without volume, it doesn't matter. Bottom line is that what we are going to have in the small caps today is that you're going to have at least an intraday down with volume. We'll see where it shakes out by the end of the day, but that's how this baby is set up. We go take a look at the transports once again, and the transports are basically, right now we're at 8204, and we've hit 8180. It's 8169. That's what it's going after, folks. We go take a look inside those transports. You get Delta is off 48 cents. UNP, it's the rails that are basically, the rails continue to take this thing lower. The rails are the big problem, one of the big problems inside the transports, and that's all about the oil market. Dow Industrials down 142, NASDAQ off 46, S&P's off 19.5. We're going to be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow Industrials are down $1.55. Nasdaq's off 48. S&Ps are off 20. And don't forget, folks, at TFNN, every trading day, we start at 8 o'clock in the morning, we go to 6 in the afternoon. You can get all that programming right on your cell phone, tfnn.mobi. This afternoon at 4 o'clock, folks, we're going to have our man, Mr. John Logan, on with me. And if you haven't seen the TAS profile scanner, folks, okay, we're going to be launching that this afternoon. So check it out. It's a phenomenal piece of software. We're going to have a special on it this afternoon that you're going to be able to test drive it absolutely free. That's going to be at the 4 o'clock hour. Couldn't be a better time to basically launch that baby out. So intraday out here, folks, what you're looking at is this, okay? The markets in Europe, we're at 10 o'clock. You'll get to 11:30. You're going to see our own markets press into these lows. And I suspect SPY, diamonds, Qs, all of the above, you're going to see them press into the lows. We'll see if we take them out. I do expect we're going to take them out. And I don't expect that you're going to see this market down 0.8%. Because what you do have is that we have there's a couple of our large funds themselves, okay, that have made some monster bets that, in fact, the European Union would save Greece. Bottom line, we'll see how this shakes out, but it looks that this is just counterintuitive enough that you're going to see lower prices come into this market as Europe closes, because then they're going to make the judgment call. Okay, what happens overnight? And what happens overnight, folks, whether you look at the Asian markets, whether you look at the European markets, the bottom line, the amount of bread that's been lost thus far, okay, is huge. And what does that do? All you have to do is take a look at the chart that Larry had sent out, the margin debt chart, and you're going to see that the calls are going to come in. Because what also happens in a highly volatile time like this is that the banks themselves will change the rules. And the rules that will get changed very quickly are the margin rules. The reason being is that on a fast market, bottom line, they could go south and lose everything very quickly. So what I suspect you'll also see, and this is a fundamental deal, but I've seen it happen before, is that the margin requirements will change very quickly. And they're going to change quickly because they're going to have to protect themselves on the downdraft out here. And never mind about, I know the China market well enough as to how those margin rules change. But European, you're going to see that fast, furious, all of the above. The volume characteristic out here thus far in the NYSE is still light. The NASDAQ is a different animal, folks. The NASDAQ, I suspect, is going to be leading the charge lower. It led the charge higher. And what you are going to see is that right now we're at 5029. And that 5029 has just got inside the March 20th level. It's heading for the 5008. You get back inside the 5008 level, and that's a whole different animal. That's saying that the NASDAQ, here, let me show you this one, because what the NASDAQ has done, the NASDAQ was the leader on the way up. But you get back inside this 5008 number, and that's the high, the first high that was on March 2nd. That sets up a NASDAQ down there at the 4828 level. And thus far, we've hit 5015. The 5015 is coming against the swing that was generated out here on June 9th. And what we will have, that characteristic there, is that you're going to definitely get into that level. Let me just make sure. I believe that the June 9th, yeah, you can have more volume. June 9th, we did 1.75 billion. Right now, we've already done 523 million. This is Tom O'Brien. This is TFNN. Stay right there, folks. Our man, Mr. Basil Chapman's going to come up growling, prowling with you. Dow down 168. NASDAQ off 52. S&P's off 22. Basil's coming right up, folks. Have a great one. Have a safe one.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.